Airline stocks suffer broad sell-off as travel demand dips, COVID-19 cases surge. By Tommy Kilgore. SAW data show drop in daily average of travelers for the first time since the post-Labor Day bump. Shares of airline operators were broadly, and in some cases sharply lower Monday, as the number of weekly travels fell for the first time since the post-Labor Day bump, amid growing concerns over the potential fallout from the surge in new COVID-19 cases. The number of people going through Transportation Security Administration checkpoints fell to a daily average of 844,217 for the week ended Sunday, from a daily average of 871,513 the week before, according to a MarketWatch analysis of SAW throughput data. That's the first decline since the week ended September 20. The daily average had declined back then after it got a boost the week before from increased travel on Labor Day. The dip in travelers comes as the daily tally of new COVID-19 cases in the U.S. rose to records over the weekend, and a number of European countries moved to tighten restrictions as the continent was hit with a spike in cases. The U.S. Global Jets Exchange Traded Fund Jets, minus 4.81%, dropped 5.3% in afternoon trading, while the Dow Jones Transportation Average DJT, minus 2.31%, slumped 2.6%, with all six airlines components losing ground. The airline sector's losses underperformed the broader stock market by a wide margin, as the Dow Jones Industrial Average DJIA, minus 2.29%, dropped 735 points, or 26%, and the S&P 500 Index SPX, minus 1.85%, lost 2.1%. Among the more active airline stocks, American Airlines Group Incorporated AL, minus 6.34%, sank 6.0%, United Airlines Holdings Incorporated shed 7.6%, UL, minus 7.02%, Delta Airlines Incorporated dropped 6.3%, DUL, minus 6.08%, JetBlue Airways Corporation JBLU, minus 6.47%, slid 7.0%, and Southwest Airlines Company Love, minus 3.95%, gave up 4.7%. Elsewhere, shares of Alaska Air Group Incorporated ALC, minus 7.19%, dropped 7.8%. To pace the Dow Transport's airline decliners, Spirit Airlines Incorporated SAVE, minus 7.80%, fell 8.3%. Hawaiian Airlines parent Hawaiian Holdings Incorporated HOUT, minus 5.75%, declined 5.4%, and Mesa Air Group Incorporated MESA, minus 5.69%, was down 5.7%. Also weighing on airline stocks is uncertainties over a government stimulus, which has been a key driver of the airline sector in recent months. U.S. stimulus is not a slam dunk, wrote Raymond James airline analyst Savanthy Sith in a note to clients. While negotiators are striking a more optimistic tone, our Washington policy analysts continue to see the post-election period as the earliest chance of finalizing a deal, with risks remaining in this scenario tied to the election outcome. On the bright side, the daily average of travelers for the weeks ended Sundays reached a post-COVID high of 871,513 for the week ended October 18, which is nearly 9 times the post-COVID low of 97,799 for the week ended April 19. The JETS ETF has now shed 43.9% year-to-date, but has run up 48% since closing at a post-COVID-19 low of $12 on May 15.